topping pattern in the stock market continued last week. Let's take a look at the indicators that suggest bearish conditions are expanding, but there's still some pockets of bullishness to keep an eye on and to trade to the upside. My favorite technical indicator, AT50, slipped out of overbought conditions, hit a 1-month low, and bearish signals are pressuring it downward. Apple is a big symbol of what's going on. Earnings caused a huge gap down, breakdown below the 50-day moving average. The consistent uptrend of the 20-day moving average is over. Apple's trading nature and stance has changed. The S&P 500 has confirmed its topping pattern, which was a bearish engulfing pattern from a week and a half ago. And the index now looks set to test its 50-day moving average support, which is the red line. And the Nasdaq also confirmed the double top, which is even more ominous than the S&P 500. It now looks to test its own 50-day moving average support. And the index, or the ETF of small caps, is trying to hang on, and it's clinging to its bear market line as support. I've got all my eyes on this one, and I've got a long call spread looking for a bounce. Now, the volatility index had a rare display of strength. This is something definitely to keep an eye on because it looks like the VIX may actually be bottoming, which would also support a topping in the major indices. Tesla is adding to market tensions. Look how it's teetering right there on 50-day moving average support. It's been bouncing off of this line, I think, the last 3 trading days. So if it breaks, that's going to also weigh down on the major indices. This is a stock coconut water company that I've been watching for a while. I've traded in and out of it twice, and it looks like its uptrend is breaking down. There was a bizarre bearish engulfing post-earnings reaction that is looking really bearish there. So I'll probably stay out of this for the time being. Cars.com is one of those surprising online car sellers, used car sellers that has done well this year with a good uptrend, but earnings took it down and the rebound had a setback on Friday. This is even uglier, where Car Gurus delayed its earnings report, did not provide any guidance on a date or what could be coming with earnings, so everyone just panicked and sold. You can see buyers bounced off the 200-day moving average, which was the blue line. Caterpillar looked promising after going to a new all-time high post-earnings, but sellers have taken over and left behind the dreaded evening star topping pattern. Now take a look here at SoFi Technologies. I've written a little bit about this one. It also looked promising with a gap up, but then came right back down with sellers bringing the stock down 4 days in a row, reversed the gains. Here's Wayfair, which also gapped up higher on Thursday, but sellers are trying to pressure it back down. It's hanging in there and staying above the previous year's high. Clorox, while sellers tried to reverse the Thursday breakout, I think Clorox is starting to turn around here with the 200-day moving average. Again, that bluish, purplish line holding a support. I'm long on this one. Amazon, you have to check out the blog to see more about what I wrote here. But anyway, positive post-earnings gap up on Friday. Let's see if that holds. Here's another positive, Upwork, a favorite stock of mine. I was not in it before earnings. I'm really mad at myself because that 200-day moving average really looked like resistance. Good stuff there. Read the blog for more. And bonds had a big rebound on Friday as jobs numbers came in a little weaker than expected, but that didn't offer any consolation to traders or investors. So check out the blog, drduru.com/122 for more to read more details. Click on my profile picture to subscribe to these videos and to get updated when new content comes.